Today is Monday, February 13th, 2012. Um, First thing I did this morning, and I'll say why I did it, and I don't think, to me, I'm a little nervous about this bet, but I'll hold it if I have to. I think long term, even though it's triple velocity, I made a small bet on triple velocity silver this morning, and I'll state my reasons for that. But first, I looked at last night. There was some nicer talk about Greece accepting austerity measures and everything being just great. But I really do agree with this one thing. Investors remain skeptical. I am skeptical. I think there's going to be a hiccup with this. So when I made this bet this morning, could be a one-day trade. If this stuff goes up a little bit, it's gone today. But there's a reason I went into it. I'll give you the cut right to the chase. The reason is, for some reason, for the oil bounced today. It wasn't. We know why it bounced. It bounced because the good news on possibly Greek debt being rescued and everything being fine with the euro for the short term. But the metals didn't bounce. Gold didn't bounce. Nothing bounced. Silver, platinum, and palladium were down this morning. Now it's starting to bounce a little bit. I don't know if that's going to be the case, but I'm thinking to myself, oil bounced, and it wasn't over news of anything going on, geopolitical events in the Middle East. How come silver, palladium, and platinum didn't bounce? To me, they should follow. Or we're going to hear a hiccup with this euro, and everything's going to go down. And that's what I think is going to happen. So this might be a very short-term trade if I make it or not. I'm not sure. But that was the reason I jumped in there, because it doesn't make sense that the metals didn't respond to the good news on the euro. So far, good news. But saying investors remain skeptical, and I could tell you that's how I think. That's how I think. And I can see how a lot of people are nervous about that right now, because they'd have to get now here it is. Part of the wariness among traders to push the euro higher is uncertainty over whether private creditors will agree to write down the value of their Greek holdings. Doubts persist whether the necessary nearly 100% acceptance can be achieved without triggering a credit default. That's what I say too. I mean, it's just what the average person would think if they're looking at this. So, that what I did this morning was pretty risky maneuver. So, but I didn't bet a lot. So, and I'm not going to pull it out of there to break even, or anything like that. I'm just going to leave it. I'm going to leave it because I think, silver's still going to go up. It might take a couple months, but if I get a gain on it, it's gone. It's gone. That's the way I'm going to play it. This was the silver chart, and I think it could follow oil. It could follow oil, even in the short term upon this news. The oil prices, like I said, did not jump this morning. Like if you're looking at this chart back here, I mean, they were actually, this thing was over $100 in a barrel this morning. But in my case, and this really aggravates me because the way I'm set up, I can't really make any trades till a little later in the morning. Well, I can't get in there really early in the morning. There's ways to do that, but I don't want to bother with that. It costs money, So, sometimes you can catch some good stuff earlier in the morning. I've noticed this many times. But in my case, I sold oil a little bit below 100, so I wouldn't have caught it any higher anyway so far. And as we speak, silver's sitting pretty flat. It's going up, it's going down, not doing a whole hell of a lot. And I think a lot of this is just from that statement is investors are nervous as to what the real outcome is going to be regarding the Greek measures. So this might be a very, very short-term play. If I get any gain on this thing, that stuff is gone in a second, and it might not work out. Like I said, what I based my decision upon was this morning, silver was down a little bit and oil was over $100. I said to myself, it wasn't over $100 because of something going on with Iran. It was because there was good news coming out of Europe. And then all these metals were down, including gold. So I decided to go in for a small bet on that. That might not be, that's my logic upon it. That's my logic, because I would think this might follow the movement in oil. Maybe could jump up a full percentage today, for all I know. And on triple leverage, that would be good enough to get the hell out of it immediately. But I don't know this for a fact. So I'm not going to play like, go use my trading method or whatever thing like that. But my methods are very, very, very simple common sense. Very simple common sense. And I find that works a lot better than a lot of things. There's a lot of talk too, and I think oil actually is going to be a very good investment. But I did notice, and I said this before several times, it seems that when oil goes in a very hard bull market, silver goes in a hard bull market. When one's in a very hard bull market, they kind of run together. As far as extreme bull markets, and I think oil's going to go in an extreme bull market. But if silver follows with an extreme bull market, or precedes oil going in an extreme bull market, silver's going to move more percentage. So I am leaning more and more heavily towards silver, and I always have, but even more so. And even if they blow up Iran and they have to close the Straits of Hormuz, there might be an extreme spike. Maybe it'll come down and that type of stuff, but I'm not going to know when those events are going to happen. My guess is they're going to happen in April. That's my guess. Late April, something like that. But I see oil get real cheap, I'll move into it. But if I get gains, I might jump out of it too. So that's the way I play, shorter term. I don't like, to me, some things are just not to be commodities. I don't think you want to hold real long term, like depending on what it is. If you're just going in there on leverage and stuff like that, short term is the best way to do it. So this article though is very concise, and I'm just going to hit some highlights on it. And the peak oil theory that people heard 50 million years for the last 20 years, it's true. And I know it's like, it's been said 20 years ago, and you're not really seeing tremendous difference actually. A lot of the oil prices are up because of inflation, or issuing too much currency beyond the production of goods, right? But as far as it hitting now in a more near term, that could be. And I think it's going to be more because of global demand from China, demand from India, demand from Brazil, demand even from the Middle East countries, because they're having more domestic consumption going on. And that's going to be higher demand. That's going to bring up higher prices in the United States. So even if the United States pulls back a lot on its oil consumption, it's not going to have too much of a dent in the global supply, because a lot of other countries are taking oil and using it for themselves. And you do have to figure that everybody in the Middle East that's an OPEC nation and a supplier of oil to the global market, they, one thing that I picked up on and really focused in on is, most of those people, the people on the top are very wealthy, but most of the people in the countries are poor, and they all want to live the middle class lifestyle of the United States. So they're probably going to start consuming a hell of a lot more of that oil domestically, and it won't be available for export, because they want to build up their economies internally, and they could do that with cheap oil. So I think this stuff is actually going to go up quite a bit until we get on some alternative fuels or some other way of energy, because as of right now, this is the whole game right here, crude oil. But it goes on. I'll just hit the highlights on this. Conventional oil production seems to have reached a plateau or peak around 74 million barrels a day since a few years ago. Actually, it's 88 or 89 million barrels. I don't know why he's saying that, and I saw other figures. Therefore, he concluded by saying there is more evidence pointing in the direction of peak oil than not. But what will happen if more severe or if our fears are unfounded, Well, but the expensive to produce unconventional fuels are supporting the price of oil and giving credence to the notion that while the world might not be running out of oil, it is surely running out of cheap oil. Yeah, common sense. And like he's stating that unconventional fuels are expensive, so that supports the price of regular crude oil, conventional. OPEC's conventional oil output is expected to increase from 29.3 million barrels in 2010 to 39.3 million barrels in 2035, thus compensating for the decline in output elsewhere. This, I say, is totally ludicrous. It's not going to do that. And I like how they, I could see you could put 29.3 million barrels a day in 2010 because you have the actual numbers, but when they make an estimate for something 13 years in the future, 23 years in the future, excuse me, and they put a point after with a decimal, that's kind of crazy. You almost think the numbers are that accurate. I don't think OPEC should be able to keep up with anything at all. It's actually, there's a lot of evidence showing that, say for instance, Saudi oil fields are declining in production. Russian oil fields are declining in production. And I know Mexico is not part of OPEC, but they're also declining in production. North Sea is declining in production. Venezuela found a lot more oil, but it's very difficult to get at. Very difficult. It goes, but demand in the rest of the world is growing strongly, and it will take many years for this growth to be arrested by peak oil. That I agree. There's going to be demand's going up, and you just can't just start an oil field, an oil rig, and get going on oil drilling like you can entertainment or something like that. You can just throw the thing together a hell of a lot faster. There's a hell of a lot of capital that has to be done, and reality is reality. You're dealing with elements of the earth. It's not like you can just make some fluff up and it's not going to happen. For at least 20 years, oil peak theorists have been warning of an immediate maxing out of the world oil production. Daniel Yergin, chair of the IHS Cambridge Energy Research Associates, thinks not. Instead, Yergin says technological innovation driven by higher prices will make hard to extract North Dakota tight oil, Canadian oil sands, and far offshore deposits accessible and profitable. Yeah, I think that's true, but I do know one thing, and that's why I highlighted this. That opening of new abundant sources will help out put off the much feared peak until perhaps sometime around mid-century. Yergin writes in his recent book, The Quest List. All these guys write books. They all talk, and that's what it is. One's talking this way, one's talking that way. Who the hell's right? That's really what the hell it is. Who the hell's right? All these guys make money writing books and talking and speeches and shit. That's what I call it. It drives me crazy because very few of them are right. The rest of them are useless eaters. That's the way I look at them. I don't care how many initials they got after their name. They're an idiot if they get it wrong. But the one thing I realize with this oil stuff when I think it's going up is because harder to extract means slower. Slower to extract. Like the tar sands, you can go, I forgot what the numbers were, and I thought it was billions of barrels. It depends on what they include. But they'll tell you there's so much oil up in the Canadian tar sands, and if you start doing the calculations, it'll last a century or something like that for the United States and Canada. That long. It's ridiculous. The problem is they can't get it out fast enough, and it requires a hell of a lot of water. And it requires so much water that they're going to lower the water table if they keep pushing the production up higher and higher. Then people won't have water. So you'll have oil, but you won't have water. Well, that's the other racket. You know that deal's coming up, right? Charge you for water. That's better than oil because you maybe could do it without driving your car, but you're not going to be able to do it without drinking water, are you? Yeah, that's really good. So that's the next deal that's coming up. But I do think what peak oil is right here, right now. This stuff's going to go up, but I think silver's going to go up even harder because that seems to be a principle in the past that silver goes up really hard when oil is in a very hard bull market. So that's good news. That's good news. Hang on to your silver, and as far as these electronic markets, right now the euro, you know, it could go up to around this point. I forgot what they said the technical resistance is. You would probably see it right in this range. I mean, it's really simplistic to look at. A lot of it is price points. Price points. How many times has it been in this range, over recent days? So, it's not going to probably go up to 135 unless they really resolve the problems with the euro. Now, obviously, if I knew what they're going to do with the euro, I'd bet every single thing 100% one way. And you know what? If anybody knew that kind of stuff, they keep their mouths shut. But I'm just telling you what my common sense move is. I don't know if that's a common sense move or not. But I think it's a very, very short-term play. I saw the crude oil up over 100 this morning, and I saw silver, gold, platinum, and palladium down. And oil was not up because of an event in Iran. It was up because of good news about the Greek debt situation. So, I don't like it, but I wanted to triple leverage silver this morning on a small bet, thinking that if this news holds out, oil should stay up pretty good. It kind of floated down a little bit. It was up over 100, but it's still up. I would think silver could make a 1% move, and that's all I'm looking for. Because that'll mean about almost 3% on triple leverage, and I'll be out of it. But I expect oil to float down. And when they're talking about investors being skeptical, oh boy, I am skeptical like crazy. And it's just a common sense thing. It's a common sense thing. There's so much yin and yang news going on with this Greek debt situation. And every time there's good news, it's followed by bad news. Every time there's bad news, it's followed by good news. And that's probably the way to play it. But it's still kind of a guesstimate, It's like when there's some bad news out and everything tanks, that's the time to buy. That's actually when I will be more comfortable with buying. And I only decided to make a small bet, like I'm repeating myself, is that oil was up over 100, silver, platinum, palladium, and gold were down this morning. So, that's my strategy, and it might be very short term, and it might be the bad move. But if it isn't a bad move in the short term, I'm going to hold on this stuff because I don't think silver's going to float down extremely hard. It'll be up to 35 in a month, no problem. Sometime within the next month, that's what I think. It's gonna go over 35, and so it'll be a win. But I'd rather have it a win today. Be nicer, right?